that London is now the biggest stock market in Europe again after many, many years in the doldrums. Although everybody's watching what happens on the 4th of July with considerable interest, I think financial markets have come to the conclusion it's A, going to be a Labour win, B, they're going to have a decent majority, C, they've not said anything frightening yet, so let's kind of think about something else. Best cure for low prices is low prices, and you've seen buyers turn up, and I think that's it's an indication of London's maybe start of a return to favour, whereas France has now got that political element to it, which it hasn't had for perhaps a long time.
And joining me on the podcast and on video, Russ Mould, Investment Director at Stockbroker AJ Bell. You're Russ.
I'm well. Greetings from the London office. So it's all a bit quiet. I'm on the ground floor. It's a bit quiet down here, but the upstairs is very, very busy indeed. So we're all hot desking now, which I must admit brings me out in hives. It upsets it upsets my sense of natural order. It makes me feel very unwell.
Yeah, no, I know what you mean, not because everyone likes their own little space. I mean, you go into work, there's an uncertainty about. I've never done that, but I mean, I'm assuming you know people like to have that desk. That's my desk. You know,
I know somebody was sat at my desk this morning, so I'm sort of head down. I'm all discombobulated, but it took me about 2 hours, but I've got over it now.
Did you just hover around them for a little bit?
No, ridiculous. Well, even more frustrating. They'd gone into a meeting, so there was a bag and there was a laptop there, no person there. She was like, "Wonder if I can get?" We were like moving them.
Yeah. Just do that. Yeah.
I thought that would be a bit rude. Probably modern office manners. That's probably completely unacceptable. So
yeah, I know. Just slip in there. Just put your name. Create your own name badge.
Yeah, just put a dog and some barbed wire there and see what happens.
This is Russ Mould's desk. Leave it. No. Okay.
Trying to be a good citizen.
Do you know what? I did post out yesterday about we're just chatting then about the London Stock Exchange. It's regained, isn't it, position as
so I'm told. Yeah, I've had a lot of questions about it this week. That London is now the biggest stock market in Europe again after 2 years of coming in behind Paris and France. Although I think it was a Bloomberg story that first ran this, and fair play to them for spotting it. But if you look at something like, say, the Vanguard FTSE All World Exchange Traded Fund, which tracks a basket of 3,600 stocks, and in their basket, the UK has got a weighting of 3.7%, and France is 2.7%. So that's not happened overnight. So then it's a matter of how you measure it and all of those different things. But I'm told that London is now bigger than Paris again, which I guess fits into the narrative of, I mean, does it really matter? Well, not desperately, but it fits in with the narrative of perhaps London coming a little bit back into favour after many, many years in the doldrums and receiving a kicking. And obviously France has had a particularly big wobble this year because of the political situation there and the snap election that President Macron has called. So whereas in the UK, I think, although everybody's watching what happens on the 4th of July with considerable interest, I think financial markets have come to the conclusion it's A, going to be a Labour win, B, they're going to have a decent majority, C, they've not said anything frightening yet, so let's kind of think about something else. And I think that's probably where the UK market is, whereas in France, nobody knows what the result's going to be, and the French market is on edge as a result. So I think that's been the short-term catalyst, but the longer-term catalyst partly comes down to mix. French market very heavy on luxury goods, which have done brilliantly, but are now on very high ratings, and China has slowed down on them, so that hasn't helped.
Yeah.
UK market, as we know, very unloved mix of miners, oils, banks, insurers, and consumer staples, but got very cheap. There's been some interest. The yield of the cash yield is very good, certainly when you add up dividends plus special dividends plus buybacks plus takeovers. And you've also had those takeovers that have made people think, maybe there is some value here, even though we've seen the bid for XPP Power withdrawn today, one or two other deals go astray, like Currys and Elementis. There's still lots of M&A activity going on, and we've even had a couple of IPOs go quite well. So London is it's the old thing. Best cure for low prices is low prices, and you've seen buyers turn up, and I think that's it's an indication of London's maybe start of a return to favour, whereas France has now got that political element to it, which it hasn't had for perhaps a long time.
Yeah, well, that's Raspberry Pi or Raspberry Pi.
Yeah, there's probably not much of a chart to look at there, is there? Because it's only been trading for a few days, but
yeah, but nevertheless, it's gone from what I think I owned it. I think 340. I think it was. I didn't tweet it out, but and now it's at 440. So it's a good start. But do you know what's surprising as well, though? I mean, they talk about snap elections. Does that ever work? Does it ever pay off for the person doing it? Because it never seems to. And when you say conversely, look at the UK economy, and the Conservatives, it's almost like they've had several general elections. There's so many leaders, so many change of departments that there hasn't been consistency. And we go back to the old adage of markets hate uncertainty, and that's what they've sort of had under Conservatives. You never know which leader's coming in next. There are about 5 leaders in the last 5 years, and now I think people are saying if Keir Starmer wins this Labour and it's pretty much nailed on, that at least the leader there, maybe some consistency in the leadership, that he'll still be there in 4 years' time,
I think
rather
the
than
one
chopping
thing
and
that
changing.
I think the one thing that you'll need, you'll need for that is a majority that gives him some space because that
Yeah,
party still has, like any organization, or there are always different opinions, and in parties there are different factions, and if he's got a very small majority, he may find his ability to act constrained, or may find himself pressured to deal with certain topics that he might otherwise be able to leave alone. So I think a working majority, not a coalition, and a working majority will be definitely what markets will be looking for. They won't want to be thinking about he's got a majority of 3 and there's a certain fringe in the party who are asking him to do this, otherwise they'll vote him. So I think that's what the markets will be. At the moment, they seem content with what the party is promising in terms of tax. They don't seem too frightened of the thought of a windfall tax on oils. They got over Tony Blair putting a windfall tax on utilities in 1997 pretty quickly, and Blair had a whacking great majority. So he was able to do what he wanted and didn't have to spend all of his time fighting his own party to get something done. He was able to get on government. And I think that's probably
yeah,
what with the one thing that markets would be, if it is going to be a Labour government, and then I think you need, from a Starmer's perspective and from the market's selfish perspective, a working majority, which means there's, as you say, there is no infighting. There's no threat of 5 prime ministers and 5 chancellors in 5 years. That's the other thing that markets will be looking for come July the 5th.
yeah. And if he's clever, he'll be looking ahead because I mean, they're almost scared to score an own goal. I watched their
Yeah.
Labour Party conference and interview on the BBC. I think it was asked 3 different, senior leaders or senior sort of cabinet, shadow cabinet ministers, saying, "You're going to win this election," and they all said the same line. They said, "Well, not one single vote has been cast yet," so they're almost, really scared of saying
Yeah.
the wrong thing. But I suppose it's a good thing. But what I'm thinking, if he's looking ahead now, what he doesn't want to do is if the market, I think he's going to be sitting in a lucky position where the economy sort of rebounds, interest rates come down, and it'll help the economy. So he may be sitting on an economy that's doing improving. And if he doesn't alienate sort of those, floating conservative voters, then they'll vote him in again if he does well. But he's got to understand that he's not going to play to sort of the their old traditional Labour, and just because that's the way. I mean, it's like Tony Blair, isn't it? Moving to middle ground a little bit. That's how you capture those Tory voters. Do you know what? Just look at the size. I mean, that's the UK FTSE index there. But I tweeted this out yesterday, and just put in context. So they say that the London Stock Exchange hit 3.18 trillion in valuation. That is not even the valuation. Every single stock listing,
That is
it's
correct.
not. Yeah, not even the valuation of individually Apple, Microsoft, or NVIDIA. So
No,
those companies are bigger than the entire stock
and
market. That's
as again,
phenomenal.
then if you're a value driven investor, would you rather own NVIDIA with annual earnings of 60 odd $billion, or would you rather own 100 FTSE companies with annual earnings of a couple of hundred,
Yeah,
253 billion? And like that's the question. Now, clearly, you're going to argue NVIDIA is going to be growing a lot more quickly,
yeah,
potentially. But equally, that is the valuation discussion, and you can. I think the statistics are similar in that if you can either have Nvidia for $3 trillion or the DAX 40 in Germany for about twice over.
mm,
So again,
yeah,
it's a matter of what your personal investment style is, and we've discussed Nvidia a bit, and that share price chart is pretty vertiginous there, and
look at that.
momentum is a very very powerful thing, and these things can run on for a lot longer than you think. But generally speaking, when I start to see chief executive officers being treated like rock stars and being asked to sign women's tops at computer fairs, and I must stress she was wearing some clothing at the time.
Yeah,
Um, then that's sort of thing that just from a soft indicator perspective makes me quite nervous. And Elon Musk was been given a similar ride a couple of years ago, and his share price has done not desperately much in the last 2 or 3 years. Dare one say. So I think you've always got to be a little bit careful. It's yes, by all means, do you just never fall in love with the stock. Don't,
yeah,
your football team, no matter how much you love it, doesn't love you back. They'll still let you down on a Saturday, and unless you support a certain team in blue, I suppose. And
mm,
stocks, they don't love you back, and there will be times when the valuation is sufficiently high that maybe you are going to struggle to find incremental buyers. And again, if everybody's on one side of the boat,
yeah,
eventually, Either people have got to go back to the other side of the boat, or the boat's going to tip over and people are going to end up in the water. So what we don't know is what's that tipping point and when it is. We have seen similarly imbalanced markets before, and they can stay imbalanced for a good couple of years. And
Yeah,
we have
yeah,
obviously ever had to know that 68, 69, 72, 73, 98 to 2000. But in the end, they all ended in a pretty rough fashion. And so I think, again, you've still got to try and stick to your valuation disciplines. The value hunters will clearly have a difficult job, justifying themselves paying $15 trillion for 7 stocks when that's a
yeah,
third of US market cap and therefore by implication a fifth of global market cap.
yeah,
Momentum plays, I can understand why they're getting excited. The upgrades from NVIDIA have been staggering in the last 12 months, but the law of large numbers might start to kick in. And, NVIDIA is a company that's had a history of customers double ordering its products. And if you listen to you listen to the Apple thing last week from Worldwide Developers Conference, Worldwide Developers Forum,
mhm,
Tim Cook talks about Chat GPT at the end of a 2-hour presentation for about 2 minutes.
yeah.
And
I know.
I've listened to Sundar Pichai of Google, and I've listened to Satya Nadella of Microsoft. None of them have yet actually really stood up and said, these are the 5 or 10 things that our customers have told us they want from AI that we're going to deliver. They've
Yeah,
talked about writing emails more easily or creating your own emojis. Whoop-de-doo, as far as I'm concerned. I know I'm a Luddite and I'm a Yorkshireman and I'm 54, but at some stage, they're going to want a return on investment on those really, really expensive NVIDIA chipsets. And if they don't get it, there might just be one of those periods when they all sit and think about what they're doing. Demand slows down, and NVIDIA's share price gets taken out to the woodshed. Now, that's not a forecast, but if they don't start generating a rapid return on those very hefty investments, it's not impossible. As an investor, we're not trying to predict the future because nobody can. We're trying to balance a range of probabilities and the likely outcomes, and which leaves you the greatest potential upside and which leaves you the greatest potential downside. And then you choose between them and manage then which is greater up or down. And in any speed bump will not be received well by NVIDIA's share price, no matter what a brilliant job it is doing technologically right now. And that's the
yeah.
danger that you've got if you're a momentum player. Equally, you're obviously at the moment embracing upgrades, and you've been winning that argument absolutely hands flat. So fair play.
Yeah, well, it's. I mean, people like you said. I've got a book coming out later this year, and I actually got a chapter that took my "Don't Fall in Love with the Story." Figures are fact. Everything else is just opinion.
Yep.
And trouble is, people do fall in love with stories, and they make an emotional investment. And trouble is, when you do that, you're emotionally attached to the story of the company. And even when the shares start underperforming, it's almost you have super confirmation bias. Well, if it's dropped by 50%, that means there's more upside. But you can sit on that drop or loss for years or months. So you've got to look at like I said, come back to the basics of valuation metrics and all that stuff and growth and all that. And of
It,
course, a lot of that story pumped in. Those 3 stocks, I think, created about in market cap about $1 trillion of value over the last 2 weeks, and that largely based off AI hope. And I'm thinking, if those 3 companies just roll over, some of these index funds, tracker funds, are going to take a big hit because they're massive. They're
that is
absolutely ginormous.
and you can see how that can work because it's clearly self-reinforcing on the upside. Market cap goes up, weighting goes up, index funds buy, market
Yeah,
cap goes up, index weighting. But equally, we saw in 2022 when the first whiff of interest rate increases came up, that worked in reverse really, really quickly. And these stocks did take a hammering, and it's
yeah,
easily forgotten, but they did take a drubbing. And so you've got to proceed with caution, particularly when something's done well. It's the old Sir John Templeton thing. People always ask me what's looking interesting. He said, it's the wrong question to ask. I'm always interested in where people are pessimistic because that's where the
yeah.
value is and where
Oh
the
yeah, yeah.
lower valuations are. And that's when you have downside protection as well as hopefully upside potential.
Yeah, well, if you go back, quite a few months back, the house builders started rallying pretty much.
Yeah, we've talked about those this year. Look
In
at that.
October 2022. Look at that as Taylor Wimpey,
Yeah.
one of the biggest
I,
there,
I mean,
and it's up a decent chunk there.
the sector
From
that I'm
that,
thinking of, I'm doing work on right now, and is one that people have written off as a bad job, which is real estate.
yeah,
And if
yeah,
you look
yeah,
at I'd be interested to see what the chart for the UK REITs looks like because, again, they've been
yeah,
written off. People are working from home, online retail's killing bricks and mortar, tum 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 tum, and yet, but they are very very interest rate sensitive companies. And they've got a lot. They have a bit of debt. So if rates do start coming down, that will help. And
yeah,
my trains are packed. I'm not being funny. Anecdotally,
yeah,
people seem to be coming back to the office, or maybe not 5 days a week, But nevertheless, there is demand for quality real estate out there, and you are seeing deals being struck, and you're even seeing M&A in the sector. So the UK
Yeah,
real estate investment trust sector, if you're a real member of the awkward squad,
yeah.
which then it's because a lot of those stocks are trading at big discounts to book value. I'll be
Which name
intrigued to
do
see
you
what
know?
the
Do you know
chart
it to
looks
go
like.
offhand? Have you got an epic one
No, it's
offhand?
just the UK Real Estate
Yeah.
Investment Trust, UK REITs, so real estate
Okay.
investment
Okay.
trusts.
So,
There'll be an ETF for it, I'm sure, but otherwise
yeah.
there'll be a FTSE sector for it. Otherwise, don't worry about
So
it.
I
We
won't
can.
find it. Okay. But
Or just
yeah.
pick up British Land or Land Securities as a proxy. Pick up British
Yeah.
Land. But Land Securities. It's in the FTSE 100. So pick up
Land.
Land
Yeah.
Securities as a proxy.
There we are. Yeah. That's a flat line. And I assume they pay like dividend, do they?
They are to maintain their REIT
Yeah.
tax
Six
status.
point
They have
four
to pay
three.
dividends. So
Yeah.
there's a So and that's it's not I won't say that's compelling, but
Well, it's come down from
you're coming
at
out
the
for an
height. It
awful
was
long way. So we'll
13
see.
quid. It's down. That's half the price of what it was in
Yeah. Well, yeah,
2015.
it's never
Yeah.
recovered from the great financial crisis ultimately, but
No,
so
yeah.
let's
Yeah.
see how
You
that
know, I've
one
heard quite a few
develops.
people mention those. I don't know much about them. I've not really looked into them, but
I mean, in
yeah,
the end,
actually,
at the moment, if you look, the key to these things is the rents are coming in. It's the rent that pays the dividend. It's not the capital value. So the danger is, yes, the NAV is coming down because the capital value has been shrinking, though there is some signs they're stabilizing, but rents are in, voids are fairly low, and overall there are very few signs of customer bankruptcy. So that again is if the
mm,
rents are coming in, the dividend's being paid, the dividend yield, as you say, is more than 6%. So if you're an income
yeah,
seeker, yeah, it
yeah,
might be worth some further research, shall we say? And they are
yeah.
very, very interest sensitive. If you drop the land securities chart for 1990 to 1995, if you can,
Let's get back to I put on a weekly chart. Here we go.
yeah, don't do it daily, or it does. If
19,
you
yeah. So I got 1995 here to wow, it's a volatile chart. It went from
look at that, but when you've got
380 to almost
but when you've
14
got rates
quid.
coming down, then these things really, really do go.
Yeah,
So
yeah,
they might not even for a value hunter, there might not be ones to or maybe to ones to rent. But when rates come down, these things do generally
yeah. Well, look at
have a
that
jolly old time. So we'll see if
from the
it's the
Great
same
Financial
this time
Crash.
around.
Yeah, from the Great Financial Crash
I
to
mean, yeah, because they've never recovered really from that because they had too much debt. Then there were lots of rights issues. But it's
it's
interesting. We have seen one or two
470%.
bids here recently.
Yeah, that's 470% from 2009
Mm,
to 2015. 470% it went up.
yeah,
That's
low
that's a
interest rate
decent move.
environment. Bosh.
Yeah. In fact, talking about interest rates, first of all, a couple of events. Tomorrow we have the
UK
old
inflation.
inflation data. Yeah, look at that. So yeah,
2%.
CPI
There's
year
the
on year.
forecast. Look at that bang on target. Must be the first time in about 3.5 years, I would think.
Yeah, I mean, if that comes in, that'd be amazing. The 2.3 last month,
I mean, I
2%.
guess energy price caps, fuel have got a lot to do with that. Food inflation's softened right off as well. The supply chain carnage has come to an end, but and money supply growth is basically zero. So again, that's
Yeah,
the other thing to watch. So the Bank of England's monetary policy you could argue, is working in that respect. The
yeah,
question then is when do they start to cut? And I'm sort of slightly coming around to the conclusion that they'll probably end up cutting slowly and then quickly, just as they ended up raising slowly and then very quickly. Does that make
yeah,
sense? So that's my
yeah.
deep held prejudice,
Yeah.
but it's only a prejudice.
Yeah, so in fact, I said tomorrow we got that 12 o'clock, Thursday, sorry, 12 o'clock. So unchanged, they're saying.
Yeah, but again, the
It's
voting pattern for the NPC will be the important thing to watch there. How
yeah,
many more? What's the decision on the 9-person committee? And I think it was 7-2 for no
yeah,
change last time.
7-2 there. That's
So
it.
there you
Two
go.
two for cut, seven unchanged.
So it'll
Yeah,
be interesting to see if there's any movement towards 6-3 or 5-4 because that'll give us a sense for. I mean, markets are expecting what September at the moment, August, September at the moment. So the closer you
Well,
get
yeah,
to 5-4, then I guess the more likely people will think there'll be a tipping point at some stage in the second half of the year.
yeah. Marvelous stuff. Well, we are 2 exciting days ahead.
Yes, and it's Royal Ascot week. See you there tomorrow. I'll
There we
give you
are.
a tip of the hat.
Yeah, just give me a tip. Marvelous, Russ. Thanks for that. Speaking next week.